All right, so in the previous panel we talked about sales and a focus on driving revenue, and the partner in crime in sales is often marketing, and we want to talk today about what it is to market in the enterprise space where you have oftentimes complex products, you have a new category you might even be defining, where you're trying to tell a story that no one may have heard before, but that you believe is very valuable. So we have three experts today. I'm going to introduce our panelists, and if you could each say a little bit about your company, what it does, and where roughly you are in terms of the stage of company growth. And then we'll kick off with some questions. So first, Scott Holden from ThoughtSpot.
Thanks for having us, Tom. Hi, everybody. Scott Holden. And ThoughtSpot, for those of you who don't know it, we were founded in 2012. We went GA just a couple of years ago. It's when I joined the company. At the time, we were about 40 people, and now we're about 175. Let's see, we're something we call search-driven analytics. So we're a BI software company, and the easiest way to think about us, we call it Google for numbers. So for those of you marketers in the room, you might type something like number of leads last week by day, and a chart would pop up. And so we're trying to bring a radically simple approach to the world of analytics, trying to be an easier version of Tableau for those of you who know that company. And yeah, I'm happy to be here. Thank you.
Steven.
Right. Good morning, everybody. Steven WASTIE. I work for a company called Origami Logic. We've been shipping product for about 2 years now. We're about 80 people. What we do in life is help marketers understand the performance of all the various activations across all our paid, owned, and earned media. So we suck in all of the information we can from all the various APIs and files and so forth, and help them understand what's working, what's not working. And we typically sell to large advertisers, B2C and B2B brands.
And Steven's both a CMO himself and has also been selling to CMOs who have some unique stories to tell around that.
Double side.
Hello, I'm YAEL, and I work for a company called Tintri, and we provide cloud infrastructure products to enterprise, mid-enterprise, and large enterprise, supporting use cases like DevOps and test dev and cloud-native applications. And I have been with Tintri in this role for about 3 years, and we're about 550 people, and on a multi-$100 million run rate. And before Tintri, my last full-time role was at VMware, running marketing for the company. And when I joined VMware, we were around 180 million or so, and when I left, it was approaching a couple billion. And in between VMware and Tintri, I spent some time consulting with 5 different companies. 2 of them started from pre-stealth. Actually, 3 of them started from pre-stealth, and 2 of them started in the low teens in revenue. And over time, for these 5 companies, which included Cloudera, Medallion, and Tintri, they grew. Actually, 2 of them got acquired, and 3 of them became multi-$100 million run rate companies. So I felt that I was very close to the topic that we're here to debate about today, which is growing from nothing to that very significant first major milestone of 100 million.
Great. Well, let's start talking about the first few million. So the 1 to 20 million revenue, kind of the early days of companies' development. Can you talk about what were the make or break points in defining your brand, right? So you're the CMO and you're trying to establish yourself to represent something in the market, and no one's heard of you yet, and you don't have a lot of resources. You know, what are the things that can make or break that initial kind of market position establishment? Scott, we'll start with you.
I'll start. So when I joined the company, we were effectively 0 in revenue, and so now we're kind of in the significant double digits. And the thing that, I spent prior to ThoughtSpot the past 7 years at Salesforce, and saw Salesforce from about 1,500 to 15,000 people. And you start to take for granted a little bit of the, the benefits you have working in a larger company. When I first came in, the main thing is that I wanted to, create a very differentiated position in the market. And I thought that would be easy given our product is this search-driven solution. But for those of you who know the analytics market, there isn't really a more competitive software market than that. And so the main thing for me in terms of building the brand is that we've had to do a couple of, like, you know, I would call it clever or unique things to stand out. And so I'll give a couple of examples of those. Every analytics product says it's easy to use and that anybody can do it, and the proof's a little bit in the pudding. So we've really pushed this search-driven message and have been consistent with it. And that's, I think, one lesson for marketers is to try and find your differentiation. And there's always this temptation, I think, to like hop on the next hot thing, whether it's, you know, AI or machine learning. We certainly do parts of that in our product, but to keep your top-line message consistent, and for us, that's search-driven analytics. We say search-driven analytics for humans to try and add a little bit of a, you know, kind of a head-scratching end to our statement. If you go to our website, that's what you'll read. And then we have this kind of tagline, which we say is, don't BI, just search. And those two messages of search-driven analytics for humans and don't BI, just search have been kind of cornerstones for us and things that I've been tempted to waver from over time, but I feel like you really have to remain consistent to it, both for the people as you're ramping inside your company, and then when people engage with you, people remember what they've heard. Word of mouth is a huge thing, and if you're always changing the message, hopping on the hottest trend, I think it hurts you in the long run.
Yeah, tempting to ride the buzz bandwagon when there's all sorts of flashy news media about some new trend, but it sounds like stick to your knitting, be focused, and be simple.
Yeah, I think a couple of things. You know, I guess we're all judged by the company we keep. So we put a lot of attention on that customer experience from the beginning. So it's kind of obvious for SaaS companies where you're, you know, judged by churn and ARR increases and so forth. But I saw this at AppDynamics, and they took a very early on bet on customer success as a function, and really over-invested that actually in the beginning and focused very much on NPS. And then we did the same at Origami, where I think we've had pretty much zero churn. I think we've had one customer churn in the lifespan of the company. And so what that means is, you know, you have other people tell the story for you. And we create these halo brands, we create these halo effects. And I think that really starts to, you know, lay out a tone and a voice that people can associate with. I mean, we sell to marketing teams. Marketing teams hate being sold to, and they're very self-referencing. And so those customer relationships that we have tend to be very, very important for us, not just from a, you know, land expand perspective, but also for, you know, the halo effect that creates. And then the other thing I think that happens is just that being very conscious about kind of outside in versus inside out. And you don't want to jump on the kind of the buzzword bandwagon, but you have that North Star, and then just have a mechanism to get out there with a point of view that is compelling, that's differentiated, and all the activations you want to do around to get that out there. But stay focused on actually what, you know, your buyer, what your buyer's buyer really cares about, and educate them along the way, particularly in the area that we're in. You know, there's a lot of churn. You know, the marketing teams out there today are dealing with a lot of transformation of their own, and so they're constantly looking for, you know, advice and, you know, best practice sharing. And part of the role that we play as a vendor is helping to share that, democratize that, and bring people together. So having a point of view, getting that out there, being vocal about that, being opinionated about that, but doing it with in a very kind of soft, sort of educational, edutainment kind of approach, as opposed to just trying to sell a product.
You mentioned reference customers and how valuable those are, but some of the challenges in the early days of the company's life is your reference customers don't want to go public that you're working with them because they don't really know who you are and they want to make sure everything's going to work. How do you overcome that friction where they say, well, we'll do the reference in 6 months or after the pilot, when you really need them to speak up now?
Yeah, it's not easy, and it's never been easy. You know, I used to be in a security business, and that's like the worst. You know, you sell security software to a big bank, and, you know, they're never going to tell anyone anything, obviously. But yeah, I think there are a couple of ways to think about that. I think one, you know, it's not just about the press release with the brand, right? There are lots of different ways, whether it's, you know, a blog, whether it's an event, whether it's, you know, other forms of content you can get out there. So I think there are a lot more opportunities for us now, particularly around social, to be somewhat creative about that without jeopardizing them. So staying focused on that personal win for that individual, I think, is super important.
I pretty much agree with Scott and Steve. I would just add that while a company getting started is going out there to get a lot of eyeballs and generating a lot of awareness, which makes a lot of sense. Trying to figure out how to get the first 20 or 30 customers and how to get them as fast as possible, and then find some kind of pattern or commonality among the 20 or 30 really help to accelerate the next couple hundred customers. And the learnings from closing the first 10 or 20 customers is just so critical to help validate your whole go-to-market assumptions. Is the product going to be largely based on a transactional kind of a sales model, or it's going to be very large ASPs, but also very long sales cycles, and what kind of levers you can pull along the way in order to accelerate the product sales? Are the products pretty self-explanatory so that the key is to get in front of a customer, and once you actually get in front of them and show them, they will get it, or it requires a lot of explanation. And so the first 10 or 20 customers, you just learn a lot about what kind of lead you should target, whether it's somebody on the developer side, somebody on the IT side, somebody on the business unit side. Is it somebody who is a technical decision maker or a business decision maker? And what all the asset, or what kind of experience you serve up in front of them to make a quick impression and close the deal and learn from that and replicate.
Great, and as we think about further down the spectrum, closer to the $50 million to the $100 million range in revenue, what's different from what you just shared? Like, what would you say is going to be requiring a different approach to get your story out, to position yourself? And if there's any anecdotes from going to battle, like in that more mature market segment, what have you taken away?
Yeah, sure, I'll take that. I think in the early days, there's a lot of executive selling that goes on, and everyone, the entire company swarms around a particular opportunity, and the cost of sale is horrible, obviously, but you're just maniacally focused, right, on getting those first 20 customers and then working out how to scale it. I think as you sort of scale, obviously beyond that, because that clearly doesn't scale, then you end up with some really interesting opportunities to bring those people together. So, for example, what we found out in my previous camp at AppDynamics was when you get a group of really passionate advocates together, like we did with our sort of user groups and with our big user events, you have this compounding effect to do essentially a year's worth of selling in 3 days. And so if you can identify these forums, and so the investments we made really early on, actually when JT founded the company in customer success, you're creating those advocates, you're just being laser focused on NPS. I think our NPS score was like 87 or something ridiculous when I left. Being focused on that, kind of everything else starts to take care of itself, because when you get those people together, you get this just viral thing going on. And so when you get like a couple thousand people in a room together, and the majority of them are happy and I'm happy to be there, then you get that mushroom effect. So I think you just get the scaling factor really starts to kick in. And then you're into, we heard some of the previous panelists talk about it, you're into a scaling model, right? Sales is a process, and you end up with this capacity model, and how do you scale it? And sales enablement becomes like this massive limiting factor in hiring and so forth. And then the other point I think is making sure you understand like the difference between land and expand, right? So when you're trying to land those deals, it's very different than trying to get the second, third, fourth, fifth, sixth transactions. And so your go-to-market motions and how you organize the company around those is just very different.
Yeah, I mean, I'd say in the early days, it's a good quid pro quo. You've got basically the company jumps all around a customer and makes them successful, and in return, the customer gets a bunch of perks. They get access to your engineering team, they get access to your executives, so it's easy to make them happy. And we sell to, I think 30% of our customer base is Fortune 500, and your point about getting access to them and letting them speak publicly, the cameras at these events become a challenge, right? But events becomes a good way to get people up on stage telling their story. As long as they're not being recorded, it ends up being a kind of a good middle ground. As a company scales, yeah, I totally agree with what Steven said. It's how do you take that bespoke experience you can deliver your first customers and apply it, basically teach everyone inside your company to behave similarly as your company grows. So whether that's best practices, just making them feel like you're a smaller company and putting people inside your company in charge of making them feel that way and prioritizing it. And whether it's user groups or kind of small events, whatever the case may be, how do you make sure that that close-knit feeling you get with a brand continues? I mean, to the first point about building brands, it's a collection of every interaction a customer has with you. And so you have to find a way to kind of keep whatever was unique and high touch about your brand experience in the early days and make that extend well past that.
It's almost ironic. The bigger you get, the more you want to feel like a small company to the customer.
Yeah.
And giving them that kind of high touch treatment and sense of, you care about them, you understand them. And can they understand, what you're going to help them with.
Yeah, I would say another obvious angle is, once you've already proven that your assumptions are valid and then you're starting to kind of ramp, a critical lever is find the right partners to work with, whether it's reseller partners, if you're in a business that there is a resale community you would work with, or a strategic alliance partner. Again, it kind of depends on the space. And I just remember that for VMware started signing up OEM alliance agreements with IBM, HP, and Dell right when it was in the $150 or $130 million revenue range. Once those alliance relationships were in place, the revenue was just taking off like crazy, and every year the revenue was just doubling 100% for I think 5 or 6 years. And not only having the sales force from those large companies to sell VMware products made a huge difference, but for many of the large enterprise accounts, it was a huge psychological factor that, okay, so we're on trying this new thing called virtualization. I'm going to put my virtualized Oracle database running on VMware. Do I have the confidence that this company is really ready for prime time? Oh, actually, IBM, HP, and Dell, and Cisco, all these companies are really partnering with VMware. They're probably onto something. So there's a huge credibility vote of confidence. And any opportunity that any of us can do that, I think that you can never really start too early to cultivate those relationships, because oftentimes with these large guys, they don't move really fast. It takes a long time from when the point when you start engaging them in a conversation to actually making your inroads in those organizations and cement the deal.
Yes. So the other thing that happens is you clearly get from like the 20 customers to the however many customers, you got to clearly look for operating leverage. So you can't touch every customer, right? Even though they want to be touched, so to speak. So you then need to think about tools and products and how do you instrument your product, right? And I think we've started to do that at my current company. We started to do that pretty early on at Dynamics as well, which is just get those early warning signals that come out of the product, that come from usage, right? That you're not waiting for the help desk call or the non-renewal to take place. So instrumentation, and then changing the process of the company such that you can get sight of those and interpret those and get those insights way ahead of when you actually need to take some action. So that instrumentation needs to be super important, I think, as you start to scale and look for operating leverage, because you can't just keep hiring CS people.
Right. So on that point, part of marketing's job is to be understanding the market, understanding what's going to happen next. What are the kind of the landmines or the red flags that you can spot, right? If you're looking out ahead, knowing where the market's going to go and how you should position the company, what the competitors are going to do, have you found any kind of secret into what you're looking for on the horizon to say the market's shifting or we need to change direction? What has been some of those kind of canaries in the coal mine for you?
I mean, my perspective on it is I kind of look at it two ways. So from a marketer's perspective, are they reacting to a new story or a new concept in the market that kind of gets them to say, oh, interesting, tell me more. And that kind of relates as a marketer to your positioning and how you're telling the story of the company. And so that's one thing that you're always trying to see if your message is sticking, if you will. I mean, the other is keeping close tabs on your competitors. And so what are people buying? And so that's something that I spend a lot of time, like, I want to know what every single one of my competitors is doing, and so I look at every piece of information that I can get, and is there something that I can ascertain by connecting, from a marketer's perspective, what they're saying to what I think either they're succeeding or not, are they growing faster or slower than me? I spend a lot of time trying to understand those dynamics, and you go to a conference, I go check out everybody's booth. I mean, I think it pays.
Do you wear a disguise when you do that?
Everybody's pretty friendly. I find some friendlier than others. You certainly can get some bristled reactions when you do that, but generally speaking, if you're friendly, people are friendly back. But that's just a helpful way to just stay on top of what's happening. And sometimes you'll see something clicking, something sticking, something the analysts are picking up on, and maybe you were already doing it or thinking about doing it, and that can prioritize it a little bit higher in your product roadmap or in your messaging hierarchy.
Yeah, I think clearly product adoption, service adoption, usage, expansion. Like, for example, our licensing model doesn't have any seat limitations. So a big thing for us is people stand up all this analytics environment and dashboards and so forth, and then we're looking really closely at how widely those getting disseminated and how frequently they're being used, right, as an indicator of utility, really, and usefulness. And so that's a huge indicator for us. I think the other point is that whether in sales or marketing, customer service, we're all responsible for revenue to some degree or another. We just have different time horizons, and I think making sure we understand what our role is, what our swim lane is, and what time horizon we're responsible for. So the rep that's trying to close a deal for the quarter to make his accelerator, that's a very different discussion than someone like Scott who's looking for, hey, actually, are we missing a market opportunity that our competitors entered? And so I think whether you're building top of funnel, you're an SDR team, an ISR, an AE, a customer service rep, or a partner, it's like just understand what your time horizon is, and optimize for that.
In the previous panel, Amanda from Zendesk spoke about this unusual thing that happened where sales and marketing were looking at win-loss analyses together, and it was really surprising to her, for those functions to team up. So can you talk about what have been functional and then dysfunctional relationships with sales? I've
never heard of such thing as a dysfunctional relationship between sales and marketing. Never heard of it.
So how do you, as a company scaling, you're all under pressure and you're trying to work, in sequence or in synchronicity. What are some of the things you've learned to foster good relationships? What not to do as well as you're working with sales?
I think one of the reasons the relationship between those two teams can be challenging or difficult from time to time is, I think, for a large part, an understandable reason, marketing for a long time has been this kind of very fluffy, not very quantifiable kind of a discipline, right? It's like people oftentimes equate a lot of the things as, marketing positioning. Is this the right way to position? Maybe. Is that the right way to position? Maybe, maybe not. And so you can't really quantify, is marketing doing an effective job sometimes? Are they rolling a really good campaign? Maybe, maybe not. And I think just in the last few years, there's so many great tools that have come into existence to help marketers and sales to get a better sense of whether something is good or something is good enough or something is crappy. And that brings into focus the whole ecosystem around Salesforce and whichever marketing automation platform you use, whether it's Marketo or something else. Every stage of the lead now can be measured. And you go through, you put together this waterfall model from the very first time when you make a contact with someone to moving them subsequently down every stage in that water funnel and measuring how many times you touch that lead before it converts into an opportunity and how many more stages before that opportunity travels to a close won deal, right? When you can actually lay those kind of numbers, conversion numbers, the speed, how fast the lead has traveled, when you put all those numbers together and you actually measure the marketing contribution, there are actually tools here, or we use the Bright Funnel to measure the marketing influence on an opportunity. My sales counterpart might still say, I'm doing a sucky job, but at least you have the numbers there to actually provide some kind of quantification on this is how the marketing work is yielding and converting and how we can actually improve.
I mean, my perspective on that is that using the funnel and understanding conversion metrics, you can basically get to a number of how many leads or touches does a sales rep need to be effective. And my perspective is if you are kind of hand in hand in terms of your operating plan and know how many reps you're going to hire and kind of know where you're going, I think the goal for marketing is to generate pipeline, always number one. That's the thing that I tell every sales leader. It's like my job, make no mistake about it, is number one, help you generate pipeline. And if you can give an on kind of a building sales team leads ahead of them even starting and being able to say, hey, I'm going to try and get every single person on your sales team X amount of leads, and like I'm going to do it, you can count on me for that. That just builds a certain relationship right out of the gates. And doing that's hard. But that's the kind of perspective I take, and starts with understanding your funnel and your conversion rates and backing into what does your sales team need to be successful. I mean, at the end of the day, if you're feeding them leads, if you're in a B2B business like we are, they're not going to complain as much.
Well,
there's lots of places they will complain, but
I think,
but
they may not complain the number of leads, but then quite typically you hear that it's the quality that leads. The leads you're giving me are just not really great leads. You might hear that.
They're never happy.
And well, they're happy sometimes. But I think, let the numbers speak for itself definitely helps. But then you have to almost break it down to the next level to say, I'm not just giving you leads, I'm giving you quality leads. And the way to actually define why those leads are quality leads is, look, on the average, it takes, let's say, 2 quarters or 5 months to close a transaction, but the leads I'm actually passing to you, 40% or 60% of them actually close in 35 days. That's pretty darn good leads, right? So, I mean, I think just let the numbers do a little bit more of the work rather than us marketers saying, we ran 7 campaigns, we touched all these people and hundreds of millions of impressions, and then the sales team might just say, it's so top of the funnel stuff, it doesn't really affect me, right?
Yeah, I mean, so we sell to marketing teams every day, typically larger companies, B2B, B2C, mostly B2C. And, if you show up to a meeting, if you don't show up with data, then you're just another guy with an opinion, right, which doesn't go down very well. I think a funny thing happens when you make marketing people accountable for revenue, whether that's an MBO or something more significant, that changes behavior significantly, and it really focuses the mind. And I think, the thing that we've seen across all of these large brands we work with, before you even get to the technology stack, like that we're selling essentially, then if they haven't solved the people, process, cultural elements first, then it's going to fail, right? So we'll enable a marketing team to do pretty sophisticated cross-channel measurement and be able to determine what's working across all the different activations. If we can do that in a pretty near-time, real-time basis. But if they can't consume those insights and they can't act on them, then it kind of doesn't matter. And so I think there has to be a lot of clarity around the process, people side of things, because some of these things like pipeline metrics is kind of obvious in terms of what we need to do there, and you need to make people accountable for that. But there's some other things that, like brand, how do you measure the impact of brand building, right? And so you have to just be really specific in that dialogue and set expectations correctly and continue to revisit that over time and show the business value of it, right? What are the proxy indicators for value? And it kind of comes back somewhat to the time horizon thing, right? Nobody's really going to, certainly the sales organization is not really going to care about brand building within a quarter, right? But if they understand what you're trying to do in terms of building a category that's maybe 18 months out, that lays the groundwork for something much more significant, then it's going to be a different story. So I think it's, what's your hierarchy of metrics? What are the key KPIs? Who's accountable for them? Have you solved the people, process, consumption, organizational capabilities before you then get into the technology?
And on that point of building a new category, and what's the one piece of advice you'd give to a marketer who's trying, what's that? Trying to define a brand new category. Don't do it. So like a lot of startups, they're trying to pioneer, right? They're building something that's never been built before. They're trying to tell a story that's never been told before. And it's great to the investor, it's great to the founders, How do you get this story across to customers?
It feels like vanity a lot of the time. Everyone likes to say, hey, we're building a new category, and most of the time it's total BS. It's either substitution or some redefinition of something that's already happening.
So you're
right?
skeptical it's even a new category?
Well, it depends. I think so. The first question is be really honest with yourself about actually, like, what's the pain you're solving, and actually, is that being solved somewhere else today? Because most problems are being solved just in not very good ways. My current company, the way that people solve that problem today is kind of fundamentally broken. AppDynamics is the same thing. And so in many cases, you're going up against a series of incumbents that, for whatever reason, have stalled, right? And maybe the application stacks move faster than the underlying infrastructure measurement stack, and so one hasn't caught up with the other yet. And so a lot of it is about replacing something that perhaps is just fundamentally broken, and for whatever reason, the incumbents can't get out of their own way to eat their own children, and there's an opportunity for a whole bunch of startups, right? So we see that time and time again. I think that there's a lot of that going on, as opposed to creating an expensive exercise of trying to convince, pay the Gartner tax and every other analyst that wants to go and create their own version of the category. It gets to be pretty challenging.
Does Gartner matter anymore, and Forrester? And
yeah, I think they do.
They do?
Yeah.
I mean, my view on that, and sorry for the cynical view to jump in earlier, is I almost feel like the whole exercise of creating a category is like a little bit like the guys in DC trying to change the system. The efforts involved in creating a new category in the enterprise space is almost as hard as passing the healthcare law, whichever side of the aisle you sit on. The system is set up to make sure that you can't really introduce new things very easily. There are all these different players in place to make sure that things will kind of stay a status quo for the foreseeable future. There's the buyers, who are used to doing things a certain way, and sometimes good enough is kind of our worst enemy for introducing new things. And then there's the people on the partner side, they have existing relationship probably with incumbents, and then there are the analysts who are probably not the most adventurous category blazing kind of people to start with. So when you're trying to start a category, you have to basically convince all these different constituents that there's a need for a new category, to your point, Steve, and that the way you're introducing to solve the problem is indeed going to be something that get picked up by a lot of other people in the industry and becomes a category. I mean, I talk to plenty of people who say, I've got a great idea. This is going to be a new category. The question is, are you going to be the only company 2 or 3 years after you start calling this a category, or will be a dozen company or several dozen companies thinking that, hey, yeah, there's actually a pretty neat idea here. It is indeed a new way to solve a pretty gnarly problem, and then it becomes a category. So there's so many exercises of so-called category creation fails because I think people just get enamored with their own ideas and fail to think through this whole ginormous ecosystem that you have to convince to kind of jump on a wagon. So my personal preferences, with exceptions, B2C is different. For B2B, it's a lot easier to join an existing category and then really differentiate yourself within that existing category, how you're better and different. Once you're past 100 million or a couple 100 million, when you speak, a lot of people pay attention to, listen, then you can probably start a category a lot more easily than when you have 5 million or 10 million revenue.
Yeah, I love the new category, but I think there's a nuance to what you're saying, which is that within an established category, there can be kind of subcategories.
Exactly.
And so, our challenge has been, something like search-driven analytics sounds like it's been done before. Why isn't that a new, hey, aren't you talking about AI or about this or about that? And it's an entirely new approach to something that sounds like we've already solved it. And so from a PR perspective, it's tricky. But from a customer perspective, they're like, yeah, of course. I've been looking for this forever. Why haven't you done this sooner? And so that's been kind of a tricky thing for us because, a lot of times people will look at what is really a new category of thing, but it sounds like something they may have heard before. But there's a lot of nuance in the technology world about how you deliver on that. And so I think that's what makes our jobs fun. I mean, that's the battle that gets me out of bed every morning is to try try and go create a new category of things. And so I think that's where, if you could convince the Gartners of the world that you're seeing things slightly different, that's where the magic happens, and we feel good about ourselves.
I think people also bandy the term category around like it's a disposable thing. If you guys track the sort of ad tech, martech, sales tech, 50,000 companies, whatever the number is, kind of converging there, it's sort of like Scott said, I don't think customers care about the category name and which subcategory you fall into, and it's different between Gartner, IDC, and Forrester anyway. But like, what's the problem you're solving for them, and then the messaging that goes around that. And if that ends up being some category that gets traction, then that's great. But I think if you're focused on solving the problem that hasn't been solved before as an unmet need, or you're solving it better with a lot of value, then everything else will take care of itself.
Great. So we're going to wrap up with one more question, which is, you go off a certain direction and you think it's the right direction, but then you need to pivot. This happens at companies all the time. How do you credibly pivot when you're changing your story, when you're going one direction, and then you've got to reestablish your company's reputation and direction after a pivot?
Pass.
What was that?
I said pass. I guess the question is like, how, is that a sharp 180, or is that like a course correction? Yeah, there we go.
Don't use the word pivot in marketing.
There's the question of doing, too little, too late is like the death by 1,000 cuts. That's like the worst case scenario. So I guess the question is, how much conviction do you have in that course correction, and however severe or not, is it what you term a pivot, or is it just changing market segment, or sort of focusing over there from a sort of feature function standpoint? I think once you have conviction around whatever that course correction is, then orientate the entire company around it and make that your new North Star, as opposed to try and do too many things. The worst thing is that you kind of partially shut something down. It's like, we'll do this skunk work things over here, and you end up with like this peanut butter problem. So, however severe it is, making sure you commit to that path.
I think there's this idea of the pivot of like, hey, we're a small Series A funded company, and we just missed it entirely, but we got some smart people. Let's go do something entirely different. I think that's the pivot that a lot of us kind of initially think of. But every startup, I think every company is constantly pivoting. And so whether it's customer segment or marketing tactics or strategies or sales engagement, I think we're always doing it. And if you're not comfortable with that kind of, let's just call it modest pivoting, modest change, then you're probably a high growth company is the wrong place for you. And so I think that's what makes it fun, is that we're always discovering new things in our customer base. It's like, oh, why didn't change your packaging and pricing, and all of a sudden pipelines goes way up. You're like, why didn't we think about that? But that's the fun part of it. And so I think you got to embrace the modest pivot, I guess is what I'd say.
Yeah, I think if the changes are relatively moderate, and the changes require more of some kind of shift in the way you're approaching things, and that's when companies typically do a rebranding exercise and change their way they tell their stories. But if the changes are pretty seismic scale, like all of us are looking at the new things coming out of Amazon and Azure, I think almost every company is kind of looking at what will the business look like up and down the stack, from SaaS to infrastructure as service and the paths in between. How is this going to affect my business in 4 or 5 years? And that's obviously going to require a much deeper soul-searching kind of exercise in terms of how it's going to affect the business model. So I think that's probably many of us are going through, right?
Great. Well, help me thank our panelists for their discussion today.